Hey everyone, you're listening to the Active Turnkey Podcast, a podcast designed for hands-off, passive real estate rental investors. In the Active Turnkey Podcast, you'll hear Tom Olson and Jared Stoutmeister discuss all things turnkey rentals with other turnkey providers, service providers, and rental investors. Our goal is to help you reach your financial freedom and whatever comes after that. Let's go. Hey everybody, welcome back to the Active Turnkey Podcast. I'm your host, Jared Stoutmeister, and again, I have the Tom Olson. And we told you we'd come back with some more podcasts, so here we go. We're here.
Well, something that's been happening lately, real estate's changed a little bit over the last couple of months.
Yeah.
And man, we are really we're trying to figure it out ourselves. Mm-hmm. It's almost changing like a pendulum back and forth from week to week.
Yeah.
This week seems to be like a really good week. I think we sold like 4 houses this week.
Yeah.
Our property management company rented like a bunch of houses, like right in a row, back to back to back. So that's all good news.
Yeah.
Right. But we thought we'd do a podcast on why is my house not renting or selling?
Yeah. It's a question that some of you may have had, and again, you mentioned it, Tom. So we sold like 3 or 4 different houses this week, and they were all different channels, different avenues, and so like the MLS had a little bit of a pause for some of our like fix and flips, and so to have that movement, and it's almost like we went through a couple weeks of not even any showings. And then all of a sudden, boom! Like yesterday, we got a full price offer on a fix and flip. So it's interesting how that works and how the response of the public. But and the same thing for investors. You know, we've sold like you said 4 different 3 turnkey deals. One was an ATK deal, and a couple multi-units for those of you who like that stuff. But yeah, no, it's definitely a question that we've been asking. So I'd imagine that some of you might be asking the same question: why isn't my house selling or renting?
Absolutely. And, you know, I think we've gone through this period of time that was a little unnatural, so to speak, right?
I
mean, I think we had 99% occupancy through COVID on our rentals, and the property management company was just giving ridiculous numbers through 2020. And then they kind of had to pay for it a little bit in 2021. And then this year, it's kind of almost like things are starting to get back to what pre-pandemic levels were. But because it was so long of us being in this ridiculous pandemic, did I say that out loud? We were in these ridiculous restrictions for so long. We had unnatural low interest rates for so long that I think people started to think that was the new norm.
Yeah.
And now we're finally coming out of this and realizing it's not. It's not the new norm. It's not a norm of any circumstance or of any stretch of the means. And if you were so lucky to get great interest rates and get 3%, 4% maybe on investment properties, we all know, if you've been in this business for any period of time, you know that that's not normal. The old timers, at the beginning of this year were saying, hey, you need to refinance everything you possibly can, get into this long-term debt. And everybody's like, oh, well, maybe it's going to go a little lower.
I got time.
And it happened very fast. As soon as the Fed came out and started giving new guidance for what they were going to do. And, they've basically given guidance now for the Fed rate, which is not 100% tied to mortgage rates. I understand, but it does have some influence on those rates. It's really more tied to the 10-year and the bond market. But like they do coincide by what the Fed gives for guidance. So there is some guidance that, the Fed's given that by the end of the year, they were expecting rates to be at 3.5 to 4%. And if you look at historical numbers at 3.5 to 4%, you really do see a 6% type mortgage rate. Like that is a normal rate. It's not normal for it to be 1.75 and 6% interest rates. It's normal for them to be where the Fed believes they're going to go. So I've talked to a lot of mortgage bankers and a lot of mortgage brokers, and most people believe that the mortgage rates were already baked in. So they basically raised mortgage rates all the way to what the Fed said they were going to raise rates to. Because think about it. If you're a bank and you're going to have to loan money to people for 30 years and the interest rates are going to go up in 6 months, like what are you going to do? You're going to initially raise my rates to what I think that's going to be in 6 months from now or more even possibly. So I think part of this on the retail market was a shakeup. And I kind of said this right away at the beginning. And sometimes you say things and you kind of just don't know if that's going to be the case or not, but you kind of have this gut feeling, and it really has kind of come to now and come through, to fruition, or however you want to say that. But you get to this point where everybody stopped almost for about a 60-day period of time. I mean, a lot of people just stopped buying, stopped looking. Now, there was still showings. We were still seeing showings, but it was like you could almost feel that there wasn't a seriousness of buyers out there. And really, just recently, within the last 2 weeks, you're starting to finally see people come back to reality and say, you know what? These are the new interest rates. It is what it is. And but I think going forward, we're going to have to be a little bit more cautious. It's not an extreme seller's market out there where you can name your price and you can expect 50 offers over list price. You can, like honestly, like we've sold houses where we got $30,000-$40,000 over our list price, and it was just, to me, that doesn't make any sense why that was the way it is. But it is what it is. So I think a couple things, though, to talk about when it comes to why is my house not selling, and then we'll also get to why is my house not renting, because we went through the same period earlier on this year, actually, with why is my house not renting. Things are starting to get a little bit back to normal, but with houses, I think in the retail market, single family, especially here, I think people are going to come back to the point where they understand, hey, 5.5% rates are pretty normal, and this is just what it is. And if I want to afford that house for this certain price point, I'm going to have to afford this price point. I don't know that rates are ever going back down as far as they were. They may, I don't know, but I think they will soften over the next couple of years. At least that's what the Fed has even given us guidance of, and what they expect to do and what they're going to do with everything. So on the retail market, it kind of goes back to what a normal market would be. It goes back to the fundamentals. It kind of just goes back to, bed bath count, square footage. What do the rest of the comps say? And there's a lot of inventory getting pushed on the market right now. So we have to understand that we're going into a period of time where there was no foreclosures for 2 years, and all the normal natural foreclosures that would have happened are going to get added to the next 18 months worth of foreclosures that come to market. So number one, we're going to probably have 2 to 3 times the normal foreclosure market. And if that wasn't bad enough, people got in trouble during COVID, and all the forbearance and all the not having to pay, as well as I do, if you're a business owner or if you're good with your money, that's not good for people. It's not good for people to just let them not pay for a year and then expect them to start paying. So there's going to be that other portion, that small portion, I'd say another maybe 1 or 2 or maybe even 3% of people that might get foreclosed on because they got in trouble with this forbearance, and they got in trouble during COVID, or maybe they lost their job. And we are starting to see economics, we are starting to see jobless claims go up. We are starting to see we're in a full-blown recession, whether or not the government wants to change the definition of a recession or not. We're definitely in a recession. We definitely have lower GDP, and there are some people that are losing their jobs, but there are still too many employers that are looking for people to hire. So there's really not an excuse for people that don't have a job. Wages are going up. I was at a conference a couple weeks ago, and it was interesting because rates now are actually lower than they were during the Obama administration. Okay, so if interest rates are lower now than they were during the Obama administration, yet on average, the average household is making $1,300 a month more. Okay, so there's 2 data points, and then the third data point is, so right now people are paying between $400 and $600 more a month for housing and food. Not housing and food. Heating and food. So if you add up all your heating costs from 8-10 years ago, and then you add up all those things, like people are paying $400 to $600 more per month, yet the average household's making $1,300 a month more, and interest rates are actually lower than they were during the Obama administration. So like there is some real data points to make people kind of excited. Real estate investors should be looking at this thinking, hey, the rest of the world's in fear mode, and I'm not sure I should be in fear mode, but I need to go back to the fundamentals. My house needs to be nice.
Yeah.
Everything needs to be taken care of. Now, it can't just be the fact that my house is listed. That means it's automatically going to sell, which is what we were. Now it's, I have 16 other houses that the same buyer might look at, and my house needs to be better than all those other houses.
Yeah.
And honestly, that goes back to the rentals as well.
Yep.
Like, really, you know, we had some owners that didn't want to do anything to their properties. They got spoiled during COVID, and as soon as the house got vacant, we literally had it rented the next day, and we didn't do it. Maybe no work was done to it. Now, when that tenant is leaving a year later, now they're not wanting to do anything, and then they're wondering. You know, our average days on market for a long time was like 5, 6, and now it's creeped back up to 11, 12, 13. You know, at days on market, and some houses we've seen some houses sit for 60 days. Not because they're not being marketed, not because people aren't interested, but because people are going and looking at the house and comparing it to their other 16 houses that they want to go look at, and that house isn't as nice.
Sure.
So, and this is why I'm such a big proponent, Jared, of the making sure that your house is nicer than everybody else's house. If you're in a C-class neighborhood, make your finishes A finishes. Make them as nice as you possibly can make them. You know, this is why we put quartz or granite countertops in. That's why we put in nice finishes. That's why we try to make sure that everything is. I want to have that one. I want to get 30 applicants on my one house. I don't want I don't want to get one applicant that hopefully qualifies for my house. And the only way you get that is if your house is better than everybody else's. I mean, it's you have to look at it like if you are in their shoes, right? If you went to a house and you were going to buy it or rent it, and you had 16 different options, which one are you going to choose? You know, like, you're going to more than likely choose the house that has the best possible value for the money.
Yeah, Tom mentioned, if you listen to our previous podcast on active turnkey and how it's coming back, it's back. And in there, you know, Tom mentioned why punch list takes 2 weeks. And that's part of it. So, you know, you got a full-blown scope of work. But once you're getting toward the end and it's starting to come together, you spot things that maybe weren't on the scope of work, or maybe some things that need to be touched up that you need to focus on. And some of that can be landscaping or what have you. But that is one reason why you may have a longer punch list, because there are some items that you didn't see and that you weren't going to see until the project was finished.
And the other thing too is, like, some people will buy houses that need repair. They know they need repair when they buy the houses. And then, you know, the plan is that when the house goes vacant, maybe when this tenant moves out, that they're going to then do that rehab. And then COVID hit, and nobody wanted to do that, which I understood.
Sure.
And then all of a sudden they get new tenants in there, and then again, like, we're back to this. We're back to normal. And I do think that people need to start facing the reality. I think, you know, the retail market is now facing reality, and now us as investors need to start facing reality as well. We need to be back to fundamentals. We need to make sure that everything works, but also go back to fundamentals when it comes to what we have always said, you know, from the get-go. Like, we want to make sure that we're producing the best rental in the neighborhood that we're at, and we always want to be on the high end. And it's so funny to me because people will pay $50, $100, $200 more for that nicer unit.
Yes, they will.
It is. If you look at the numbers over a long period of time, like, you won't even. I actually wish I had a spreadsheet that I could prepare for you, but it's not even close. Like, you will make way more money if you will actually put the money into it. And at the end of the day, we are investors. We are supposed to be investing into our property. It's not one and done. You don't just make one investment and then you just set it on and you think it's just going to come back to you forever and you never have to do anything to it. We don't do that to your own house. I mean, I don't believe anybody out there would say, I have never made a repair to my own house and I've lived there for 30 years. Like, that doesn't happen. You make investments into your own personal property. Do the same thing for your tenants' properties, and you'll be shocked at what you'll get back in return. Not only from a happy tenant, not only from less maintenance calls and from all that, but also in the long run, you will find out that you'll make more money. And that's really what we're trying to achieve here. Happy tenants, happy life, less maintenance, less headache, and more money. And if you're not going to make those investments, then don't buy those properties.
Sure.
And honestly, like, it was something I even saw on Facebook. You know, a guy was talking about multifamilies, and, you know, a lot of the multifamily guys are doing the same type of thing. They're not putting any rehab into their properties, and then they're wondering why there's a building that I keep looking at, and 1/3 of the tenants are not occupiable. I mean, and 1/3 of the units are not occupiable because they haven't kept them up with them. And you're just decreasing the value every time you do that. So like, why is your house not selling? Part of this, I think, is the retail market. Part of this is the, you know, things are changing. We're back to a normal market, and it took time for people to face the facts. Now, in some areas of the country, there was such pent-up demand that they went right through it. I think Florida is one of those areas where they just went right through the last 90 days and haven't really seen much of a blip. And now we'll see if maybe they saw what we saw over the last 60 days or 90 days. Or if they just had so much demand in those areas that they'll just continue to face reality, like now some of the Midwest is facing reality, and the retail market is coming back. So I don't think that we're going to be able to continue to raise prices by 10, 20% a year. I think that we'll probably stay flat for the next couple years. May even see a little bit of a dip, but I mean, I'm super excited about where we're at. I feel like we're in good shape as a company about the things that we're going to do to ride this wave out for us. But also, honestly, like, it's kind of exciting to know if you stay the course and if you do the things that you know to do, it will work out for you in the end.
Well, it's a great take on the repair side, and we see this very often. In fact, we see this from virtually any property we acquire that is owned by an investor. They're never up to standard, never up to par. And so, of course, with that comes the low rent numbers. So that's why they're always under rented as far as price goes. And frankly, this issue comes up with home buyers. They do this. So Tom mentioned, you've done repairs at your home the last 30 years. Well, some people don't. Some people, for 30 years, it's dated. It hasn't been updated in 30, 40 years. And then they believe that their house is worth the house down the block was flipped. And then they wonder why it's not selling. Well, okay, let's be realistic. And that's the issue. I think the issue is we're not being realistic, our expectations. So you mentioned for repairs, these are things you knew you were going to have to do. You had maintenance built in your performance. You know you're going to have turnover costs. Thit's part of investing, but like you said, we just haven't had some of that.
Well, there is two different buyers here. So there is the turnkey buyer that might be listening, and those repairs are your minor stuff for the most part. Normally it's ticky-tack, normally it's this, it's that, and you, like Jared said, you do have that. But then there's also people that we manage for them that didn't buy turnkey. They just bought a property that was already rented, that needed work, and they knew it needed work going into it, and now they're just refusing to do it when the whole plan at the beginning was to actually do the work. And if you don't do the work that you plan to do, then the whole plan goes out the window, and now it's not as good a deal anymore. It's never going to perform to what you think or what you want. And honestly, our property management company really thrives in those good properties and the properties that are rehabbed nicely and that are up to par. If you get lower quality, you get lower tenants, and everything's a mess.
Well, it's expectation at that point. If you're expecting your OPS, also Property Services, to be able to provide the kind of service that they're known to provide, you need to be able to also have that product. You can't expect them to place, like we've said before, many different conversations with investors. It's the expectation. A lot of the guys in Gary over the years, they were slumlords, but they wanted top quality tenants, but then they would complain because they're not getting them. Well, that's on you. You provide a slum. So who do you expect is going to rent your home? And so again, if you're buying that, you cannot expect the type of tenant you're getting from a turnkey standard type product. You can't expect the same kind of tenant if you're not going to provide that. So the expectation kind of goes into what you mentioned about even the market and interest rates. And so if you're a new investor and you've been investing for a year, all you know technically is incredibly low interest rates, when actually they're completely unrealistic historically.
Everything that happened in the last 2 years was unrealistic.
Yeah, and so if you're saying, oh wow, interest rates are at 5.5, I can't invest, then you were never really going to be in the investing anyway. If you wanted to leverage, it just wasn't going to happen because you're basically creating your investment strategy on the best case scenario for interest rates. It's a very dangerous place to be.
Yes. So understand that interest rates are back to where they were normally. I think the markets are going to start to kind of get more normal. There is more inventory being put on the market than is selling every day, and that was not the trend for about 18 months. Honestly, even in Florida, this is happening. So there is more inventory being put on the market every day than what is selling. So what does that mean? I think that means in the next 6 to 8 months, we're going to have an opportunity where we can buy properties. I'm not going to say that we're going to be able to buy steals. It's not 2008, folks. It's not that we can get, HUD Home Store and get 30%, a $100,000 house listed for $100,000, we can pick up for $30,000, like we picked up many of those in the day. But I will say it's going to be more normal, and I'm excited to be able to offer turnkeys and active turnkeys to our buyers and to the people that we help build their rental portfolio and really help you with your wealth. But you've got to stay the course. Like I just want to make sure that you understand that your property needs to stay as nice as you can possibly make it. And if you're going to rent it, if you want top dollar for it, you have got to provide a top dollar product for somebody else to want to be able to pay top dollar. And again, that goes back to the retail market as well. Like if you're selling right now and you're on the open market, I've kind of backed off a little bit from our investors of telling them, hey, this is the best time to sell. I kind of want to wait and see. I kind of have a wait and see attitude on that. I do believe that maybe next year or the year after we may have a little bit more of a pop in prices, but I don't think we're seeing any pops right now when it comes to retail prices. And there's some parts of the country where are definitely seeing drastic declines in what their houses are worth. Especially like on the West Coast, especially California, especially New York has seen a lot of, and Illinois has seen a lot of decrease in how much their property values are worth. But areas that have population and areas that have normal standard growth and have some type of other reason why you'd want to invest there. That's why we love Indiana. That's why I love Florida. And but why is my house not renting? Why is my house not selling? Hopefully that helps clear some things up. I know we've gotten some questions. It seemed like during COVID, houses were renting in one day. We had 30 applications in one day. And now sometimes it's taking a couple weeks to rent. But I will say the houses that are taking a little longer to rent are not the nice ones.
Right.
It's not the nice ones. It's the ones that are below par, and they're really just not like you know that you could make them nicer. We know you could make them nicer. Sure. And you've got to repair things when things come up.
Yeah, and you mentioned it before. I mean, so with like the incredibly low interest rates, we also saw just massive explosion in rent. So we saw situations where from year over year, in some cases, $200 per unit, maybe more. Yeah, depending on the situation. Just incredible amount. And so investors you're seeing that, and you want it, but you're not providing the product that will meet that demand. And so again, a lot of this is expectation, and we just got spoiled. We just got incredibly spoiled.
I think we have to understand that we were inflated. Everything did get inflated, and now it's kind of like almost if we could just turn back the picture 2 years ago and think, where were we at the end of 2019? And just think to ourselves, we're going into 2020. We lost 2 years of our life. Yeah. Where is everything?
Get in your DeLorean.
And if you just get away from having delusions and if you completely get away from thinking that the last 2 years happened, then I think you will be in a much better position. You'll be positioned to be able to take advantage of the next couple of years.
That's great, Tom. And again, if you have more questions about this, please don't hesitate to reach out. A lot of the times when we're creating these podcasts, they come from feedback or questions or problems that come up. And so if you have more questions, you have ideas or thoughts along this line, concerns, we would love to hear it. You can email me at Jared@BuyAllison Group directly. I can get that. And Tom and I, we deliberate and plan and go through this, and then Tom runs with it. But we can certainly work through that and try to provide that value. And
we definitely want to help. I mean, that's why we're here. We're here to build and manage rental portfolios, build and manage lending portfolios for our investors, and that's what we do. Yeah. And we do want to be a value add as much as we possibly can to you. And you have to understand, we want your properties to perform. Yes. We want you to be able to get as much money for your property as you possibly can. If you're selling or if you're renting, it doesn't matter. Like whatever we can do to try to help you. We want to be there to be that help to you.
So if you're interested in being part of this, if this is your first time hearing about us, we do build rental portfolios for investors. You can see it right above Tom's head there. And so it's right there. So if you're interested, you can go to our website. You can go to buyolsongroup.com, or like I said before, you can go to jared@buyolsongroup.com. On our website, you can also join our buyers list. You can see our deals as they come out. And so we'd love to have you jump in there, and we can start providing you opportunities and find out. I can get on a phone call with you. I can host you. We bring people in, and you can come and see it for yourselves, not just what we're telling you. You can verify it yourself in person, and we actually recommend that. Whether you invest with us or anybody else, go and see their operation, verify, and see if that is what they say it is. And so, but we also have an event. You want to tell us a little bit about your event?
We have an event coming up. It's September 30th through October 2nd. It's called the Real Estate Free-for-All event. We've got a bunch of speakers from around the country that are going to speak about lending, are going to speak about mindset. They're going to speak about how to get the best rates. They're going to speak about, I think we got Money Multiplier going to be here. We've got a fund manager who's going to be here and talking about, investing in maybe a fund. We're going to talk about active turnkeys. We're going to talk about our lending company, Conduit Capital. And you get to come see our office. Part of the event, the first day, we're going to have an open office that morning. And it starts on September 30th. The doors will open at 10 a.m., but we're going to actually have the first session is going to be at 1 o'clock. So we're going to have 3 hours there to kind of just socialize, get to know the people here that work at this office, and then we'll start. And we have a great time. It's really just to have fun and have connections. We started this a couple years ago, and the number one goal was to just have fun. I will tell you the number one rule is no whining. That's the only rule I have. Just no complaining, no whining. And we have a bunch of fun. We have 2 nights, so two different places at night. We're right here at our office where we kind of have a party at night and just have fun. We also will have some masterminding and also have opportunities to maybe connect you with borrowers or lenders. And also have opportunities for you to understand more about turnkey and how you can build your portfolio as well.
Well, hopefully this has brought you some value. And so if it has, please.
I forgot to say, if you're interested, go to goodsuccess.com, and that's how you can get your free ticket. I do need you to get a ticket because we only can accept 100 people here in this office. That's the most that we can have. We already have in the 70s of people that have already booked. So I don't have very many seats left. If you want to come, again, it's right here in our office, 2701 West 45th Avenue, Gary, Indiana. Best airport's probably Midway Airport if you want to fly into. And we do have a link on the website for hotels that we have booked blocks for you guys as well. So make that happen. Hopefully we'll see you here.
Absolutely. Very good information and details that if you're interested in that, you'd want to know. So definitely visit goodsuccess.com and you can get your ticket. And so again, hopefully it's brought you value. If it has, like it, share it, give us a review, 5 stars, all that stuff. We really appreciate you for joining us.
5 stars.
5 stars. Active Turnkey.
The best way to buy rentals.
Thanks, guys.
God bless.
Olson Group Network makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Unless specifically stated otherwise, Olson Group Network does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. Any third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of Olson Group Network. Olson Group Network assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast or the compliance with the applicable laws of such materials and/or links referenced herein.